Hello and welcome to our weekly US markets review brought to you by SG Futures. Currently recording this on the morning of the 18th of January, which of course today the markets are closed for the Martin Luther King holiday. So we've got a little bit of a shortened week as we come into this week. What we're going to cover off this week is a couple of slightly bearish signals which we saw last week, which are by no means a bad thing in this current market, and how we go about potentially playing those signals this week. We're also coming into earnings season, so this week the financial institutions will begin to report. Typically in the run-up to earnings, we will usually see a little bit of a ramp in terms of pricing. So let's see how we can try and factor that into some of our analysis this week. So as always, we're going to start on our daily RTH candlestick chart, which is what you see here in front of you. And last week was very much an inside week when you compare it to the previous very bullish week that we saw previously. And I will just mark out the candles in here. So we had Friday here, Thursday here, Wednesday, Tuesday and Monday. So we're going to be looking at this particular range in here. Now when we first look at this particular part of the chart, we harp on all the time about balance. And really what we've seen prior to Friday was 6 sessions of what you would call balance. And those are marked out on here. And I've kind of highlighted them as well in these green lines in here, which I'll also get to in a minute. But we see we have some highs, we have some lows, and pretty much the price has started here, up here, retraced down here, back up here. And this is a sign that not only are we seeing acceptance at these price levels, but also that there is agreement between buyers and sellers that when prices get too high, that they retrace, and when prices get too low, buyers step in and drive the price back up again. But what we saw on Friday in this particular candle in here was a break away from balance, in that whatever information the traders who trade this market felt that it was necessary to take price away from this balance area. So prices were no longer acceptable between buyers and sellers up here. So maybe it was time to start retracing and auctioning some prices down here. So this is a break away from the previous value. So what we see down here, our pink line, this is our 20-day moving average, and you can see we're still quite a bit away. We haven't even had a touch of the 20-day moving average, so we could maybe expect that perhaps we're going to see a test of that particular area in here. Now if you looked at our video, and we didn't do a video last week, but we did a video the week before when we had just broken into this particular range in here. So we were looking at these particular candlesticks right up to this point in here, which is Friday the 8th. And we said that we were quite a bit away from the 20-day moving average and that we were due to have a pullback. And that's exactly what we've seen over the past 5 trading sessions last week. So we're still quite a bit away from the 20-day moving average. We can probably expect a test down here. Now, what you're going to see in the green lines marked out in here is these are our balance rules. And depending on where you mark the balance from, so I've marked the balance from the high, that's pretty clear cut in here. But depending on where you take the balance low from, it'll give a distance in ticks, which I've measured in here, which is roughly 60 handles on the E-mini S&P. And the balance rules dictate that if we break out a balance, that the target should be the same number of points to the downside. So we've sketched out a rough area in here, going down to about the 37.04 level, which would indicate a potential break of the 20-day moving average. And when we break the 20-day moving average, the 50-day moving average down here in blue really starts to come into play. So I wouldn't take this as absolute 100% support just yet, but it could just be an idea for a level that we play off as trade continues this week. It will also correspond to a couple of low volume nodes over here on the left-hand side of the chart. So these are areas that the market may come down and re-auction. But what's really worthwhile noticing on this particular chart in here is, just grab a rectangle, is this particular low volume area in here. And that's pretty much the entire double the balance area from last week. So this area to this area, this area to this area, it's all quite low volume when you look at the volume over here. So we're already coming in this week knowing that there is a good possibility that we're going to start to fill out this area. Whether or not we break below the 20-day moving average, this might only we might only break below it in a daily time frame and maybe close above it. What we have seen in the Nasdaq is that we have actually properly broken it, so that could be a driver for the E-mini S&P to break the 20-day moving average and hold below it. And if it holds below it, then definitely the 50-day moving average comes into play. Below that, we have some areas down here which we would look for from these are our previous balance areas down to about the 3640 level, and I would have the 3660 level as being a pretty important level as well. So there are two levels down here to the downside that we're definitely going to look at if they come into play this week. So what we'll do now is we will flick across into our weekly market profile view and have a look at some subtle nuances that we can maybe take from that. So we flicked into our weekly market profile view in here, and what I'm going to mark out here is the previous week. So this is last week, which was an inside week, and this is the week previous, which we've said in our previous videos that we got very overly extended, and there was the chance that we would fill out this sort of area in here. And that's exactly what's happening. What we've had is a break below the balance area, so below 3780, which is this level in here. I'll just mark it off for you. It's there roughly. We've had a break below the 3780, which we deem to be a key level in this particular market. We've broken below that and we have closed below it. So depending on how the futures open this week, we've seen in Europe that things are a little bit soft, but they're not hugely bearish just yet. So we're not getting out our sell orders and going crazy short on this just yet. But what we can expect when the cash market opens tomorrow is that perhaps we're going to start looking into filling out perhaps a little bit more of this area down here, which corresponds with our level that we took from the previous chart of the sort of 3704 mark, which is something we may want to look at. We also have a weekly value area low down here from this week in here at the 3698 level. So that could be a level that we potentially pivot off, and we will mark that off on our daily chart when we go about trading the market day to day. Now, ultimately, what we want to see is what we want to try and see this week is if we are in the bullish frame of mind and things aren't overly bearish. And I think what's really going to skew things this week is the earnings coming out from some of the financial institutions. So if things get bullish on that side, then we may just see a bit of a middling week. And the middling week might just be where we see support up around the top area of these three previous weeks in here. So this is where we might start to see buyers stepping in, as we had good chunks of overlapping value across these 3 weeks. So there is previous value in these 3 weeks in here, and this is where buyers deem prices to be acceptable. So logically, this is immediately an area that we're going to consider looking at. So let's mark off this section in here. And you're probably running from about the 3710 down to about the 3690 sort of range down here as potential levels to pivot off. So as we go and look into the daily profile, let's see if there's any more information we can take from that. So this is our daily profile chart, a much zoomed out version of it. So we can see that we mentioned we have this big balance area up here, and this is where we have pretty much overlapping value. So we had, when we broke above, we had value printed up here, we closed in value, then we had overlapping value the following day, which was Friday the 8th, and we closed right on the highs up here. And this is where we said in our previous video that price was very overextended from the 20-day moving average, and we were likely to see some sort of a pullback and reversal, in that the probability is more in our favor if we were to maybe enter some trades on the short side, or if we were maybe going to sit in our hands and maybe look to buy some dips. Things aren't overly bearish up here, but we're starting to expect that there's some degree of consolidation likely to happen. Now, we spent most of last week on Twitter talking about expecting this consolidation or this pullback to come, and it only really arrived on Friday in this particular TPO profile in here. But as we said, we've had overlapping value across the balance areas. We're closing in value pretty much 3 days in a row. The signs were starting to show on Thursday that we were likely to start seeing some downside on Friday, and that was when we closed outside of value from that day. And that was a nice subtle hint that we were potentially going to break away from this period of balance, and that we were maybe going to start heading down towards the downside. And that's literally what we got on the Friday. We had a little bit of a pump straight off the open. So we opened in here and we topped out at 37.80, which a lot of people would have said that that was a sell any day of the week. And we found support in and around the 37.40 level, which again was another level that we've marked off on one of our previous charts. So coming into this week, what can we try and expect? Well, we've had a previous long period of balance, which is in here. We mark that out in here. And if we start to get into this area of balance and we start to get acceptance in here, then we start to target some serious downside levels in here. And we also need to look back at a previous area of balance, which is in here, which is an overlapping period of balance. So we would start to mark out some levels around here at the 36.44 mark. And we can see here that that was a previous high over here. We can see it was respected as a low here and here. And we can see that whilst we closed below it in here, this is also a value area low, and we broke high above it the following day. So it's an area that the market has respected, and it will be an area to the downside that we would potentially look at if we get acceptance inside this particular area of balance. So any acceptance in here, we're going to be looking at how price reacts to this particular part of the chart. So what we'll quickly do now is look at our much more zoomed in version of our market profile chart. And we can see here when we break out, I really want to have a little look at Friday in particular, in that we had inventory from Thursday that was 100% net short in this market. So we closed at 37.92 and we had a big break down to 37.71 on the cash open, so it was quite a big gap down. Now, if you're familiar with the gap rules, that if the gap fails to close, you go with, or you go in the direction of the gap. So in this case, the go with was the sell to the downside because the gap failed to close. And really the key level was 37.80, that when we failed to get acceptance above that and a failure to get acceptance back into Wednesday's range, that these were a signal that the gap was going to fail to close. Now, what's going on in the mechanics behind the scenes in here is that you've got inventory that's net short from up here, and what's happening at the opening is the unwinding of that inventory, and that is people who are net short taking profit, which is driving the price higher. So these aren't net new buyers. These aren't buyers that are seeing value in the market. These are actually just people taking profit. So we saw this as a potential for a down day or a consolidation day on this particular market. Now, what's really, really interesting and a really subtle nuance that you're not going to see on a candlestick chart on your spread betting platform is the VPOC. And the VPOC is the volume point of control. And this is going by the volume of the given day. This is the fairest price to do business. So the VPOC is actually still inside this balance area, depending on where you take the high and the low from. So if you were to take the low of the balance areas here as 37.75, then the VPOC is outside it, but I have taken it from 37.68, which we can argue that the VPOC is inside that. So that is a sign that things aren't overly bearish, and that we're not going to start diving in and going completely net short on this market. That these are pretty much just confirmations of what we said in previous weeks, that it was likely that we were going to come back into this area and re-auction some of these prices down here after we had broken higher. And that's exactly what we've seen. Now, what you're seeing over here in this particular part of the profile in here is this is the current Globex futures. So given we're on a Martin Luther King holiday today, there's going to be no RTH session. So we're going to be keeping an eye on what is happening in regards to the inventory. And what we have here is a spike in end period from Friday, and we've closed at 37.50. Now, if we were to mark off where all of the volume has changed hands since the close on Friday, then we can say we're probably about 70% net long from Friday. So there are potentially some buyers who've stepped in here and who've potentially seen value around the 37.50 level, which is a nice round number on the E-mini S&P. And there is the potential that maybe when the cash market opens tomorrow, that we start to see some upside and we actually start to fill out some areas in here. And if we start to see some upside, the key areas we're going to look at is the two levels we'll take from our balance area, which will be 37.68 and 37.75, and then also 37.80, which corresponds pretty much with Friday's high. And how the market responds to these levels, if we get any sort of upside continuation, will tell us whether or not we're going back into this balance area up here. Failing that, if we get rejection, we are likely to see, and what we will look for straight off the bat will be a break of this low. Now, this is looking at this right now. At this particular moment, we don't know if futures are going to break lower today on the back of maybe some moves in the European equities, which will usually follow suit. And if we break below this level in here, 37.40, which is the current Globex low, then it's likely that we will see potential during the RTH session of filling out these set of single prints in here, which we've previously mentioned, but then also our levels that we've taken from our previous chart, which would be in and around the sort of 37.04 mark. We mark that out, 37.04, all the way down to, I would say, 36.96, which corresponds to the low from Tuesday the 5th. Now, what is interesting with the low from Tuesday the 5th is that this particular profile on Tuesday the 5th is what we call almost your classic open drive. It is almost a classic open drive in that we've opened here, we've only had a very brief look below, hardly any contracts changed hands, and then boom, we were off to the races to the upside. So we had a little look down here, and then bang, we went higher. So these, typically when we see an open drive, we can start to think that perhaps the other time frame has stepped in here, and the other time frame being generally people who've got more money than us and who are trading on a much longer time frame, and who have potentially seen significant value in driving the market higher from this particular price down here. So this will be a key area, and this is where we start to think about the psychology of who else is in the market with us. So there are people who've got substantially long from down here. We can probably ascertain that. They've got substantially long from down here. And if price comes back down here and breaks below here, we know that they're underwater. And what is the psychology of somebody that's underwater, and how much are they going to be panicking, and how much pain are they going to be in? And depending on how much pain they're in, then we may see them puking out of their positions. We may see more responsive buying to try and drive the market higher, to maybe try and average in. But these are the sort of things we want to think about in terms of who's in the market with us and who's potentially in pain. So as we come into this week, we expect, as we mentioned, probably a little bit more consolidation based on Friday's move down here, a filling out of this area all the way down to about 37.04. And this area in here and this area in here, we deem that to be very important. And how the market responds to that will be immensely important. If we break below the 36.96, some serious levels come into play, which would be based on our previous balance areas that we've looked at. And again, we apply our balance rules, and I think this takes us down to about 35.80 on the E-mini S&P. Now, we want to see some really bearish news to really get us down there, or some really bearish sentiment to get us down there. So I think from a probability point of view, it's unlikely that we get down there, but these are the things we need to consider when we analyze this particular market. So I hope you found this video useful and informative, and can help you frame your narrative as you come into trading this market this week. Here at SG Futures, we ran recently an invite-only webinar. So if you'd like to know a little bit more about Market Profile, you can register for free on our website at sgfutures.com/education, and you can get a recording of that webinar sent to you completely free of charge, and get an idea of how we go about some of our analysis when we do our weekly videos. So as always, make sure to visit our website, sgfutures.com/education. Feel free to leave some comments in the video. So now that just leaves me to wish you all a very happy trading week, and stay safe out there.